beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Well, that is the market which is looking up. Nifty, yes. Bank Nifty, broader markets all are looking up and about. So, a smart session so far. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel is with me. Nigel, hi.
Well, the Nifty Bank is playing a good role, right? Today, the problem is in the broader markets. The mid-cap index has come in for some profit-taking. But, Prashant, after the kind of run that we saw yesterday and the strong close that we saw yesterday, I think the bulls will take it, right? If we end home, go home with gains of 80 to around 100 points, I think the bulls will be pretty okay. And the Nifty Bank, that's really building on to gains. It's taken out some crucial technical levels. So, I think you'll be betting big on the Nifty Bank, actually, moving up from here on.
Yesterday it was PSU banks.
Yes,
today it is all ICICI, HDFC, Axis. I mean, the entire pack is actually doing quite well. That's the private bank space. By the way, this is, for the Nifty, this is exactly the congestion zone. We are in the congestion zone. So let's hope, we don't lose our way in all the congestion and there is a clearing on the way higher. Because, once you take this out, you're basically looking at about 23, in the 23,800 or in the vicinity of the 23,800 kind of levels. But lots of time has been spent exactly where we are right now. So let's see if we're able to do it by closing in the next 1 hour or so. Well, it's an action-packed last 60 minutes coming up. Lots of opinion you'll hear. Mid-caps, of course, are weaker a little bit, and FMCG and private banks, as we told you, are looking better. But lots of managements, right? Apart Industries has offered ambitious commentary. We'll play out some sound bites from that interview going forward. We have the top boss at Bharat Forge Group, of course, telling us that, well, they're looking at new areas like semiconductor equipment, basically. We also had, by the way, the management of NRB Bearings earlier in the morning. That's, again, a company you don't hear from very often. And again, sounding very, very positive. In that sense. I mean, actually, the common thread through all these three companies is manufacturing. And, all three sounding very optimistic about future prospects in that sense. Well, how should you position yourself in the last 60 minutes? That's the question. And Mitesh is with us with the answer. Mitesh, good afternoon. Good to have you here. So, your sense on the trades to take?
Good afternoon, Prashant. See, I think, while the Bank Nifty has done slightly better than the Nifty, I think broadly, the Bank Nifty, needs to get past 55,500 and close about it. We are just there. Actually, we did touch that level, making high of 55,555.8. But the follow through is not, very dynamic, and that's why maybe the Nifty is also failing to get past the 23,400, 30,450 zone. Which is where, if you recall, in the month of May, we had about 3 or 4 lows around the 23,450, 400 zones. So I think it's a market which is mildly biased on the positive side, especially the financial names, but yet lacking decisive strength to break on the upside. So we're watching the index. Nothing much being done on the index position-wise. But on stock side, I have one buy and one sell. Pidilite is something, which is breaking out today. That's a buy with a stop at 1495. Look for targets of 1580. And Coal India, I think after a long time, Coal India is showing first signs of correction. So let's just sell, look a stop at 458.5, 459. Look for targets of 435 on the downside.
Oh, that'll be interesting, because once it gets past that 447 odd mark, there could be some further selling that will come in. I say that because the 447 is the mark where the allocation was done. In that recently concluded OFS. So that's going to be an important mark. 447 is the important mark you want to look at. But let's turn our attention to the oil and gas space. Oil India is under pressure on the back of a Morgan Stanley note. Sonal joins us to fill us in with details on that particular note. Sonal, over to you.
Morgan Stanley is generally bullish on the upstream sector because of the capex that will be announced. They're expecting investment boost of $10 billion a year. There has been a royalty cut that has come by, new discoveries of natural gas that we've been hearing about. There's no windfall tax that surprised the street positively as well, because there was a fear there could be a windfall tax otherwise as well. For Oil India in particular, they're not so bullish because it does have a refinery segment as well. That is the Numaligarh refinery that they acquired from BPCL a few years back, and that is the reason why they have downgraded it to an underweight from an overweight. Target price has been cut as well to 404 rupees a share. They see 6 to 7% downside risk to street estimates now that they're expecting oil prices to normalize. That is one of the reasons, of course, but they are expecting delayed natural gas average selling price increase, so it will be delayed versus what was expected earlier. Lower refinery margin, there could be cap on diesel sales as well from that particular refinery. So on a consolidated basis, there could be some EPS cuts. They are expecting slow increase in domestic production as well. So yes, these are some of the reasons why Morgan Stanley is not so bullish on Oil India, majority of it coming in from the refining segment.
Got it. Okay, all right. Thanks a lot for that, Sonal. Clearly, big impact out there. Oil India, the stock is now down 10%, I think. So massive downtake on that particular name. In fact, the markets have come off the top. We've run into resistance at around the 23,380, I think so. And, we have moved actually now lower, broken the 23,300 mark on the downside. So keep an eye on that. Nifty Bank, though, still holding with a gain of around 180 points. Sid Kemka, Head of Research Wealth Management at Motilal Oswal Financial Services, joins us on the show. Sid, what do you make of these two, Oil India and ONGC?
Yeah, hi, good afternoon, Nigel. I think definitely based on these geopolitical issues, if the crude price comes down, I think that's a big negative for some of these oil companies. But if you look at structurally, what we see is that the upstream oil companies, they are in an upcycle given the increasing production capacities that they are doing, and even the new gas find that Oil India did recently. So I think if you look at in that sense, while the short term may be a bit impactful because of the sharp fall in the global prices and whenever this war stops. But I think overall we believe that there is a slow and steady growth. If you look at specifically for Oil India, about 2 to 4% of oil and gas production CAGR over the next 2 years. And I think on falls, one can look at them incrementally, but currently I think the sentiment is definitely a bit on the negative side.
Got it. Okay. All right. A quick word, Sid. We had Mitesh who was talking to us about Coal India. That played out actually as a beautiful trade, tactical trade, because it has tailwinds with regard to global prices moving up. They're talking about better offtake after a couple of years of absolutely no growth. And the street is optimistic that that cash balance, dividend yield as well is there. The question is now, should you be getting out of the stock or you be getting in? Because it's come back down to around 447, which is incidentally the allocation price in that recently concluded OFS. At 452, would you be interested?
Oh, I think yes. If you look at the current energy crisis globally, has brought in a lot of focus towards coal, especially in a country like India, where we have a lot of domestic coal production, mining, and hence we have seen newer policies, especially if you look at the coal gasification policy that the government has come out recently. So in the long term, I think that's such a good play on the domestic energy. Plus, if you, as you rightly highlighted, I think on the production side, the operational performance that has improved with the production volume going up, the mix of e-auction volume, where the spot prices for coal had gone up sharply. So I think overall, we remain positive on Coal India. The volume CAGR is about 4%. Revenue CAGR about 5%, but more importantly, EBITDA CAGR of about 12%, and the dividend yield and the comfort of the price levels, I think that remains. Stock price had moved up, I think, post the OFS, but now again coming down to the attractive level. So yes, we would remain positive on Coal India. We have a buy rating at target price of 530.
Yeah. Got that. Sid, we'll just sort of play out some sound bites from our conversation earlier with Baba Kalyani. And Baba Kalyani is and Bharat Forge is looking to enter new segments. I mean, it's used to be forgings, autocoms, but of course it's much beyond that. Actually, Sud is with us. Sud, why don't you just sort of wrap up what Mr. Kalyani told us in that conversation?
The stock has seen a huge surge in the last an hour or say after Baba Kalyani spoke to us and talking about two major segments. One, that is the defense segment. For company, defense has been the focus area for the last few years. And he has said that for the private sector, defense used to be earlier at the component level. But for companies like Bharat Forge, defense has now become a very important part and companies making a platform for the same. And this segment is going to see a huge surge over next 5 to 7 years. And private sector will be making products that will be designed and built in India and will be sold to the world. Second segment that he has focused is semiconductor, and that can be one of the reasons why stock has seen a huge surge. For the first time, Baba Kalyani has talked about that one business that company is working on is semiconductor. He's not looking at manufacturing business in that space. He's looking into becoming a part of the global supply chain, and he's working with 3 of top 5 companies that are part of the semiconductor global supply chain. And those companies are Lam Research, Applied Materials and ASML. Let's listen in what Baba Kalyani has to say and had to say to CNBC-TV18.
The new area that we are working on is in semiconductors, not to make semiconductors, but being part of the supply chain of semiconductor equipment. That business is pretty large. It's in billions of dollars. And we are already working. There are only 5 companies that are in the semiconductor supply game, and we are working with 3 of them to see how we can make products for them and get into this supply chain. These are companies like Lam Research, ASML, Applied Materials, these companies. And surprisingly, by the way, they all use metal parts for their equipments. And many of them are forgings, some of them are specialized machine parts. So that's an area that at least we have got our eyes on.
Okay, all right. Clearly, the street listening in to the commentary that Mr. Kalyani spoke to us here on CNBC-TV18. The stock was down 3%, now it's up 1.5%. That's the kind of impact that you've seen with regard to those comments that have come in there. But Sudarshan's had a very, very busy day. He's normally a busy man. But today, additional responsibilities covering Bharat Forge. He's also chipping in and telling us what's causing the buzz in car trade. Sudarshan, take it away.
So since Q4 earnings that company had announced in the early part of May, since then the stock is up more than 30%. YTD, if you take a look, it's still down around 13%. So recent developments. First, company has talked about OLX India's elite buyer program, and for that sign-ups have crossed 80,000 May 2026. And this program has now started contributing to OLX revenue growth, and company believes that it's going to become a significant contributor to company's growth in coming years. Next, Q4 earnings was very strong. It was 12th straight quarter that company had posted more than 50% year-on-year growth in EBITDA. And going forward, it believes that there is scope for further expansion in the margin, even from current levels of around 33 to 35%. And talking about the profit outlook, by over next 5 to 6 years, it believes that profit is going to become 4 times of the current level and going to hit 1,000 crore in next 4 to 5 years. Recently, Kotak Institutional Equities on 3rd of June had come out with a note upgrading the stock to buy, and target was increased to 2,300 rupees per share. It has said stock price is under pressure YTD on concerns of disruptions from AI models, but company's deep dealer database and value-added offerings may limit the impact to an extent, and it has upgraded on account of sharply higher valuations for OLX, and OLX sees steady GMV growth, improving monetization and margin. And also it has raised FY27-29 EPS estimates in the range of 1 to 5%, mainly on the back of higher profitability estimates for OLX. So OLX has been one of the major reasons why company believes that profit is going to become 4 times in the next 4 to 5 years, and also brokerages have been bullish.
Yeah, I mean, it's a big move, right? So coming in, I think, about 20% very quickly on car trade recently.
Correct. So on 7th of May, company had announced earnings, and that day the stock was hovering around 1940, and now currently it's at 2460. So almost 30% move.
I think there was that fear of that AI, and that was the risk, and that's why we saw a sharp sell-off. And then a lot of people got interested at 1700, 1800. I was in fact at the conference yesterday, and a couple of fund managers who used their opportunity, they said after 17, 1800 they couldn't see it directly, and today it'll be even higher because 2100 became 2400 in a matter of a day. Well, let's get in. Sid, what do you think? Will you ride this car?
Nigel, unfortunately, we don't have a coverage or view on car trade, but some of these new age businesses, I think they have been showing pretty strong up move, especially after the performance. So we have companies like Urban Company, Lenskart. I think some of the other high discretionary value items. There is where I think the interest and strong growth in business is visible. Definitely a good story, but right now not under our coverage.
Oh, okay. All right. Got that. By the way, markets have actually come off the top of the day. We're up only around 40 points, dipped below the 23,300 mark as well. Sid, let me ask you about Meesho. Any view out there? Jeffries came out with a note. Today there was a couple of large trades. I don't know whether that was the pending trade out there that's actually got cleaned out. But do you have a view out there? Because volumes are very, very high, but there will be some disclosures since the lock-in has ended. Your take?
So yeah, again, another stock where a new age business, which is showing a lot of traction, showing a lot of promise. Unfortunately, again, we don't have coverage. But as I said, this is a space that the quick commerce space that we really like. We believe that some of these companies like Eternal, Swiggy, now even Zepto is lining up for the IPO. I think this space looks more and more interesting as we go ahead.
Okay, all right. I think you tracked the next one, which is APAR Industries. Let me first cover the news flow today. It's trading at a record high. It's making fresh lifetime highs today. Well, they spoke to us here at CNBC-TV18. Mr. Kushal Desai, the CMD of APAR Industries, says he is betting big on the cables business, which is expected to see strong tailwinds from the data center boom. Let's listen to that conversation and then get Sid's view on the stock.
We are hoping that we'll still be in the 40s as we complete the year. We've been guiding a 10% growth. In the data center complex, there are no conductors used, it's basically cables.
Right.
So the cabling would be between 2 and 2.5%, maybe slightly higher than that if the specifications of the products are at a high standard like fire survival, etc., etc. There is also a huge play for us of bringing power and data into the data center. We are looking at it in the cable business, and we've publicly stated that about 25% year-on-year growth for the next 5 years. That's what we are targeting. There's a significant amount of capex that APAR has planned. 50% plus of that capex is going into the cable side to create this capacity. For APAR, we have 3 C's that we focus on. The first is capacity, which is the capex that you put in, is the easiest to do. Then you need to improve your company's capability of being able to produce the right products to meet requirements of customers, etc. And the third and most important is to improve credibility of the company. So to do very well in a market like the US, you have to really focus on the last C. Looking at 15% plus,
Revenue
so
growth
we closed at 23,000 crores last year.
Okay, well, stocks at a high, 4.5%, and almost all of the move, of course, coming in after the conversation there. Well, CleanMax is the next one we want to just focus on, and we'll ask Sid's view on both. But CleanMax, of course, is buzzing. That deal with Meta coming in early this morning. Vivek has got details, and I mean, just looking at the business of CleanMax itself. Vivek, take it away.
Well, that's right. Let's first understand what CleanMax does. CleanMax is a renewable energy open access provider of power, and the company, remember, differentiated itself from other companies because it is present mainly in the C&I segment, which is the commercial as well as the industrial segment, basically meaning that the company does one-on-one PPAs with industrial customers and largely does not participate in tendering or auctions as far as power is concerned. Now, as far as today's announcement itself is concerned, the company as well as Meta have gone ahead and have signed an agreement for development of renewable energy capacity in India. CleanMax will develop close to 837 megawatt of new solar as well as wind capacity across the states of Rajasthan as well as Karnataka. CleanMax will develop and operate the RE capacity. Meta will go ahead and purchase 100% of the environmental attributes from these projects. Now, just to give some perspective as to the size of CleanMax is concerned, remember, CleanMax is India's largest CMI renewable energy player. Contracted renewable energy portfolio stood at 5.7 gigawatt at the end of FY26. Contracted capacity portfolio was at close to 6.4 gigawatts versus 5 gigawatt on a year-on-year basis. And remember, the company typically signs PPAs of 25 years. So of the remainder of the portfolio, 23 years is what is pending as far as the company's contracted portfolio is concerned. In terms of FY27 targets, remember, at the end of Q4, the management did join us. They said that they expect to go ahead and operationalize 1.5 gigawatt of commission capacity in this particular year. In terms of valuations, not really cheap after the very sharp rally that we've seen. Axis Capital estimates that at the current market price, the company could be trading close to 12.5 to 13 times of FY28 estimated EV to EBITDA.
Just one point. This is largely wind and solar, right?
That's right.
But the data center capacity, and I think we've asked the management when they've been. So this is, there's nothing called base load for data center, right? I mean, 24/7 it is base load because the data center works non-stop. I mean, data centers just as a concept. So this is for large data centers. Will this be a combination of grid power plus on-location power from CleanMax, or like are we looking at battery systems and whatnot? I mean, is there clarity there?
Well, a couple of quick points. Number one, yes, in terms of data center, when you're talking about the base load, during the daytime, there is actually surplus of capacity. But the bigger problem comes in the evening time when there is actually not enough solar or wind to actually go ahead and supply. So in that particular case, thermal is what comes into the picture. But yes, going forward, most of the renewable energy PPAs that you will see will be a combination of solar plus BESS, which is battery energy storage system. Now, talking about CleanMax itself, one thing that we need to keep in mind is, the company typically when it signs a PPA, it's not necessary that for this particular project, CleanMax will be providing the entire power supply. In this particular case, Meta will use environmental attributes. In that particular case, Meta will be able to go ahead and offset some of the carbon footprint that it generates, for some of the other facilities via this particular purchase agreement with CleanMax. We will be speaking to the management of CleanMax in a couple of days, get some more details on this particular development itself. But largely, what they've highlighted with us is going forward, it is going to be a mix. And in typically the risk that in terms of the transmission is borne by the company that is buying power from CleanMax.
All right. Well, thanks very much. We don't have very much by way of details with regards to Meta. There is confidentiality issues, etc., etc. But the other thing to wonder about is if you read what's happening in the US, because these large hyperscalers like Meta, etc., have all the money in the world. I mean, sort of speaking, in a liberal way, they are actually enabling their providers in lots of ways, enabling them to provide services to them because the requirements are so large. But we don't have that level of detail with regards to what they're doing here in India with companies like CleanMax. Perhaps, should come out at a later date. Siddharth, any thoughts? CleanMax first and then that conversation with Apar.
Yeah, Prashant, I think this is a space that we are very positive on as a house. Motilal, our NFO on the BSE Clean Environment Index Fund is currently on. We have coverage on stocks on the renewable energy front, plus on the recycling front. So Gravita, Gen, Resource, Acme Solar. So I think Premium Energy, Vari Energy. So this entire space looks interesting. And I think with the kind of power usage the data centers, the AI centers would be going to use, and with the focus on the environment, we are already hearing the kind of chatter that the amount of water is required in one query that we put in the AI. So I think these themes will continue to do well. We need to understand greater finer details of the arrangement, what is the kind of power supply, what is the long-term duration, and all those kind of things. But nonetheless, I think this is a space which looks interesting. The second one on Apar, I think very clean, good company, is one of the largest manufacturers of conductors and also a major player in the specialty oils and cables business. What they are now doing is that shifting to premium products. The interview also spoke about a lot of these newer sectors, segments where the demand is coming from and how they are kind of able to shift a significant portion of the portfolio towards these value-added, high-efficiency cables, conductors, wires. Financials are pretty strong, but I think stock has seen a sharp run-up and would be now closer in terms of valuation. I would say that from here on, one can expect a 20% kind of a CAGR profitability growth and similar kind of return from the stock.
Okay, got it. Any view on CMR? You had mentioned recycler, so I ask you.
CMR listed today, we were one of the bankers, so I think I would better avoid giving any view. But as I said, this is a space that we are very positive on.
Got it. Okay, thanks a lot, Sid, for joining in, giving us a take on all the stocks that we discussed. But as we were discussing those stocks, the markets actually have done a bit of a U-turn. The Nifty bank that was up 250 points, that's moved into the red. And the Nifty as well has come off. I'll tell you what, we'll take a short break. On the other side, Pramod Gopi of Marcellus is waiting for us in our special segment, Alpha Managers. Stay tuned. Well, the markets have flattened out a little bit, just around the flat line, both the Nifty as well as the Nifty Bank. The mid-cap index continues to remain under some pressure. But the mutual fund data for the month has been released, and Vinny, she's been slicing and dicing those numbers. She joins us to give us, quick insight into how those flows looked. Vinny?
Hi, afternoon. So in terms of the flows that have come in, equity inflows for the month of May, we've seen a dip coming in on a month-on-month basis, 40% decline, right? And this is the weakest inflow that we've seen for equity inflows in over more than a year. So clearly there's pressure that's come in across the board, whether large cap, mid cap, small cap or hybrid funds. Now let's break it down and look at the large cap funds as well. What happened in terms of flows there? That more than halved on a month-on-month basis, lowest levels that we saw coming in for large cap funds since December 2025. Mid and small cap, while that managed to hold on in the month of March and April, we've seen a decline coming in there as well, right? Mid cap is down 33% on a month-on-month basis. Small cap also similarly, it's seen a very sharp decline from the month of April. So May 2026, large cap, mid cap, small cap, nothing did well there. What was steady was the SIP flows. That stood steady at about the 30,000 crore mark. So on a month-on-month basis, yes, you've seen a 1% decline versus April, but investors seems like they've not panicked, at least for the long-term story. In the short term, you've seen some bit of that cautious stance that have come in from investors right now, but SIP flows steady there. The contribution in terms of SIP also continues to be steady. Contributing SIP number, that's something that is a bit of a concern and a bit of a dip that they saw coming in there. Now let's move on, talk about hybrid funds. What happened there? Hybrid funds, they also seen a decline, halved on a month-on-month basis, right? From 20,000 crores, now it's at around 10,000 crores overall hybrid funds. Specifically, when you look at multi-asset allocation fund, which was trending, which is where everyone wanted to invest in, multi-asset allocation and flexi cap funds. This is what everyone looked at. That has also come off, and that also seeing a significant decline versus last month. Multi-asset allocation down 23%, flexi cap is down 49% on a month-on-month basis. Sectoral thematic funds, they had lost their charm a while back, and now further decline is what you're seeing coming in on these funds as well. On a month-on-month basis, from 1,900 crores approximately, now it's at 650 crores, the thematic funds. Gold ETFs. We've seen that run-up coming in gold prices. Gold ETF saw some bit of a profit booking, and now we've seen sharper profit booking coming in here right now. Gold ETF outflows is what we've seen this time. Outflow for the first time that we're seeing coming in since April 2025. Silver ETF also similarly, we've seen an outflow this time. So gold ETF, silver ETF, both have seen outflows coming in. NFO, nothing exciting in terms of data points over there as well. You're not seeing much launches in terms of new fund offerings coming in. So that continues to be a bit subdued and muted, while in terms of the AUM, we are managing to hold on steady. The overall asset under management at around 81 lakhs. 81.5 lakh crore, and that's what we are holding steady at right now.
Okay, well, thanks very much for that, Winnie. So that's those are the numbers with regards to flows and that retail bid, which is sort of meant that markets have stayed rock solid even as foreigners continue to sell. And they are selling 40,000 crores this month so far. Well, Pramod Gubi is with us, co-founder, Marcellus Investment Managers. Pramod, good to have you with us here. You're not a mutual fund, but you also do take in money, and you're also dependent on the mood and the sentiment out there. So just, your thoughts on what we've seen in May, and how steady is that retail bid going to be?
No, I think it's quite encouraging if you see the bump up in the flows in March and April suggests that investors are willing to buy into the dip here. And after the rally in April, you would have expected some slowdown. So I think it's quite encouraging and positively surprising that the flows are sort of counter-cyclical. To that extent, I think it is credit to the retail investor for demonstrating such maturity, and also I think credit to the industry to have created this awareness.
But is it starting to come off a little bit? I mean, there are many who say that, headline indices being flat, were 2 years plus, maybe will start to test patience at some point. I don't know if you're seeing that at all.
Yeah. I think the returns, given the awareness that the industry has created in terms of long-term orientation, the short-term returns hopefully should not. But if the situation persists, you never know. We've seen this in the past, flows coming in at the top of the market and then receding. Hopefully, we should see better behavior this time around. But having said that, I think given the number of variables, particularly global parameters, which are not entirely under our control, and things like AI and stuff, where nobody really knows how it's going to pan out, I don't think you can say with any degree of certainty when investors will see fatigue and throw in the towel. But so far, it seems fairly stable.
Hi, Pramod. Good to see you, Ben. How would you position yourself, though? As of now, if you're deploying fresh money, would you look at the small mid caps, or would it be the larger caps that you would find comfort in?
I think we are getting into an environment where it's become a little market cap agnostic. It is a lot more bottom up. There are no obvious themes that you're seeing. In fact, from a factor perspective, we're seeing quality getting re-rated finally after almost 5 years of underperformance. I mean, those 5 years of underperformance came on the back of 10 years of outperformance, but perhaps these are early signs of quality coming back in a factor of values after values outperformance. Given that we're generally positioned as a quality house, we are seeing some opportunities, high quality businesses, particularly where we see the growth valuation trade-off attractive. The obvious place is clearly financials, where valuations are clearly attractive on the private sector financials front.
Okay.
Healthcare has been a decent exposure for us, and that's more of a structural theme. Not to say that valuations are attractive here, but if you look into it, you will find opportunities where the growth prospects can justify the valuations. The third area we're seeing a lot of opportunity, where perhaps there is a tilt towards small and mid cap, is opportunities on the back of the rupee depreciation, where manufacturing exports in specific sectors are clearly becoming more and more competitive. Even before the FTAs have kicked in, we're seeing some order books getting built up. And these generally tend to be more in the small and mid cap space.
Okay, all right. You talk about quality, but quality has been painful, right? Some of those frontline names, some of the top MNC, well-run companies, HUL, Lever, the likes, they have not given any returns. And companies like Asian Paints actually have seen a sharp drawdown. So you've given us a few sectors you like. Let's focus a little bit more. What about staples? I'm focusing on some underperforming sectors, whether or not you believe they, provide an opportunity. Staples, paints, would you look at them?
Yeah, look, I think the definition of quality is also changing. Typically, quality used to be clean accounting, high ROCs. I think along with the high ROCs, you also need to look at reinvestment rates. One of the classic sectors, I think both FMCG and IT, historically part of the quality pack, have clearly underperformed, not just in terms of stock prices, but also in terms of growth. They've clearly gone ex-growth. This is where a little bit of nuance is required. Within FMCG, I think certain categories are reaching very high levels of penetration, so therefore structural growth itself has come off. But more than that, I think the traditional moats around brand and distribution have been broken by the emergence of digital marketing and e-commerce and quick commerce on the distribution side, which has allowed significant lowering of entry barriers. So we've seen a plethora of D2C brands coming and competing with the biggies like Fevers and the Maricos of the world. So to that extent, they have lost market share. And therefore, although they remain very high ROCE businesses, very well-run businesses, the growth has clearly come off. So you need to be looking at quality with a slightly different lens. IT, on the other hand, clearly has been affected. IT services have lost share to GCCs. But more recently, we've seen the impact of AI. To be honest, nobody really knows how much of an impact this is. But clearly, that's knocked off a few percentage points of growth because a lot of the IT budgets are getting diverted towards spending on data centers from hyperscalers as opposed to dishing out contracts for the next ERP implementation or the cloud migration. So FMCG and IT needs to be seen in that light. Having said that, quality is not just staples in IT. We've seen quality companies exist across healthcare, within hospitals, pharmaceuticals, and even cyclicals now. We're seeing a whole host of manufacturing businesses tick the box on the combination of high ROC and high reinvestment rates. So like I said, if you look at the rupee depreciation as a tailwind, there could be significant opportunities for reinvestment-driven growth in some of these sectors.
Got it. Okay, all right, Pramod, thanks a lot for joining in. Wishing you a good remainder of the day, and we catch up soon to understand how you're rejigging your portfolio. Well, time to slip into a short break. On the other side, D Street Chatter is waiting for you. Nimesh will tell us what is he picking up. We'll also get our technical experts to give you some fresh trading calls. Markets slipped into the red then as we speak, with outperforming index today is the FMCG pack. You have Nestle as well as HUL, both of them holding on to gains, but they don't count much on the index itself. Good time to get in. Nimesh to tell us what is he picking up on D Street Chatter. Nimesh, good afternoon.
Hi, afternoon, Nigel. A sharp sell-off, especially in the last half an hour of trade, and a bit of surprising as well, because at least from a flow perspective, the indication were not that there is a very large selling from the FIs. In fact, there is a small MOC buy at a leading FI desk. So, not sure what led to this big sell-off, at least in the Nifty and in the larger name stocks. But again, from a flow perspective, I guess the momentum is clearly there in the private bank names. That's been the consistent feedback, and it's showing up in the outperformance as well. So, private bank is where, since still there is a good bit of interest from large institutions. The breadth is quite weak in today's market, and looks like it's a bit of profit booking day in the broader market names. So many of those mid-cap and small-cap stocks which have really outperformed in the last few months have seen a bit of profit booking in today's market. But I guess it's under pressure today. But it doesn't sounds to me that there is a very large selling from larger FIs today.
Yeah. Individual names, Nimesh. That's where all the chatter is.
So the first name is Chambal Fertilizer, Prashant. So a bit surprising, but it's moved up today, and on very strong buying flow. So not sure what the reason is, but there is a bit of FI interest in Chambal Fertilizer in today's market. So expect very high delivery volumes in this particular stock today, and hence we've seen a big up move, 5% up in today's market. The second stock is Oil India. We've been highlighting since morning. There is a big Morgan Stanley downgrade from an overweight to underweight, but I believe there are very large sell-offs as well, which is adding pressure to underperformance for Oil India in today's market. Third, a couple of names where I'm expecting fundraising very soon. Kim's as well as Craftsman Auto. Both have been consolidating with a positive bias, but now at these levels, either through a QIP or preferential is something which is lined up in both those names. And the last one is Tejas Networks. Again, it's a bit of curious the way the stock moves throughout the year, down one day, up one day. But now I'm hearing at least the street is anticipating one large order win, as well as a potential global tie-up as well in Tejas Networks. And hence you've seen in the last couple of days a bit of momentum and with a bit of larger volumes as well in that particular stock.
Large order, I mean, the one, I think this is no secret, Nimesh, the one order is the BSNL order, right? Which has been, people have been talking about for a while, years actually.
Yeah, that's been anticipated that the large BSNL order is likely to come, but this I believe is a global order. So it could be over and above the BSNL order, and also the tie-up seems to be with a global company. So these are the two bits of news as far as Tejas is concerned.
Right. Anything on Z, Nimesh? I mean, the board meeting is today, right?
So the board meeting is today. The feedback is that the promoter is quite keen to infuse money, so that potentially will come. The promoter are looking to invest via warrants or preferential, so that's something to watch out for. I'm not too sure whether any external investors or HNIs are going to participate in the fundraising. So that bit of clarity is not there, but it looks like it is the promoter entity is likely to infuse, and that's the reason the board meeting is there for fundraising today.
And with regards to Z, if the fundraise thing happens and the promoter is basically what comes after that, which the street is talking about, right? Maybe kind of a spin-off, value unlock or something.
So, of course, that chatter has been there that they're looking to value unlock. In fact, even if you listen to the last con call, the management has gone on record saying that they will eventually, look for options as far as the Z Music is concerned. So it's not a big secret that they haven't spoken at all to the investor community. But Prashant, even for the fundraising in Z, given that the promoter holding is so low, even if they propose to fundraise via preferential to promoters via warrants or whatever, it will require shareholders' approval. So even that is something to watch out for. Yes, today there is a board meeting, so they will propose that promoters wants to increase the stake and infuse money. But will the shareholders approve that is again something to track as to whether there is an approval from the larger part of the investor community for promoters to infuse at this level.
Sure. So, fair enough. There could be opposition from shareholders. We don't know. But yeah. So, we'll track this one. Thanks very much, Ramesh, for that. So, Chambal, Indian Oil, Kim's, Craftsman Auto, Tejas Networks are the stocks on the chatter list today. We'll take, should we take a quick break? Okay, I think Mitesh is with us. Mitesh, welcome back. How are you? What's been happening? I think we've come off, right, from the last time we spoke.
Big time, both the markets have turned negative. So, we'll take some STBT calls. Tata Motors Personal Vehicle, TMPV, is an STBT with a stop at 385 for targets of 374 or thereabouts. And the insurance companies have been in a free fall, I think, even breaking the earlier lows, and one of them is SBI Life. So that's an STBT with a stop at 1740 for targets of around 1700.
Okay, all right. We'll track this one, but 40 points lower, far off from where we were, 23,200 now as far as the index is concerned. Well, let's shift focus to the pharmaceutical space, and this is pharma major Cipla. CNBC-TV18 made its way to the company's Goa facility to speak with the recently appointed Chief Executive Officer, Achin Gupta. This is his first interview since taking over the strategy that he has for the business. Here's that chat with my colleague Ekta Batra. Listen in.
A lot of the mainstay of revenues in time to come, maybe 5 years, 10 years, will still stay generics, because that's where we serve the maximum number of patients. There we'll go up on complexity. So we already have B2s in the US, which have a higher complexity. We have innovated a lot in India. If you see the respiratory devices, we have breath actuated devices. We recently launched an inhaled insulin. We've launched various, I think in every single therapy in the last 1 year itself, we've launched novel products. So the journey now is to take Cipla onto the more globally relevant novel innovation, where we've done small moves over the last, I would say, 3-4 years. We've tested the waters. We're going to expand that effort. If you ask me in 5 years, we would love to have 10% revenues from innovation. But when we complete 100, I would love to see much more coming out of innovation, because that's where the world is going. And, Cipla has the right skill sets. We have the talent we have the capabilities to get there and be a bigger player in innovation.
Just give us a sense, which are the geographies that you're supplying this to? 3 lakh tablets per hour. Which are the main geographies that this is being manufactured?
So right now the biggest product which is coming out of here is actually for India itself.
Okay.
It's a cardiology product.
Okay.
Diator is the brand name.
Which is one of your most successful products right
Yes.
now for the Indian market.
In India, yeah, it's one of the flagship products.
Okay, so
Yeah.
that's being manufactured here.
Yeah. The advantage of having a facility like this is you can get excellent quality.
Yeah.
And when you have large volume requirements, that's where it works best, because minimal interventions, like you see, there are hardly any operators, and the process just continues delivering a very consistent quality real-time checks, and therefore you don't have to make too many interventions, less changeovers. I think ultimately, see, the game is about saying how can you deliver best quality at the best price.
Yeah.
So it helps you achieve both those objectives.
So how much of Goa supplies to the US? And how many plants out of the 48 units that you have supply to the US?
So currently Goa is pretty much supplying all the markets.
Okay.
And close to half of the manufacturing will be for US, but also Europe, various other markets. Developed markets, Asian markets, Latin American markets. This facility is one of our largest, so it supplies everywhere.
The reason I'm asking about the US particularly is because there's a push from the government, from the US government currently, to look at domestic manufacturing versus exports.
Yeah.
So where does Cipla stand when it comes to manufacturing in the US for the US?
Yeah, so I think that has multiple dimensions. If you see, Cipla has now 4 manufacturing facilities in the US. We are doing it with the objective of de-risking and diversifying the manufacturing. So if you talk about the 48 manufacturing facilities we have sites in South Africa, we have sites in Morocco, we have sites in China, and now we have sites in US. One of them is a new site. To answer your question, I think this is not just the localization push from the local administrations, but also gives us flexibility, because what we are able to do is take some of the more complex dose forms closer to the market. Right? So if it's a respiratory unit, which is making, like our newest approval, which is Ventolin, will be made in the US for the US.
Okay.
Advair generic, which we are expecting soon, will be made in the US for the US. So it helps us de-risk, and every country wants some bit of manufacturing to happen.
That brings me to lanreotide, which has been the key issue for Cipla this year. What is the remediation with your Greek supplier at this point? What are you doing to mitigate the risk? Is there any tech transfer, any other facility where you'll be manufacturing?
Yes. Yeah, so exactly on that de-risking theme, I think, the current supplier, which is Pharmathen, got, a warning letter from the US.
Yeah.
So they are remediating, and that's one of the tracks. Once they're ready, we will be inviting the FDA to visit the facilities and, asking for clearance once again. But in parallel, we have now started working on an alternate manufacturing, which will be in the US. So local contract manufacturer who can do this work, who's already equipped with all the necessary facilities, etc. So with this two-pronged approach, we are confident that we'll get the product back on the market.
Conversation at 5:30 and 7:30 p.m. only on CNBC TV18. The management of Cipla talks to our very own Ekta Batra. Okay, good time to welcome Mayuresh Joshi then on the show. Mayuresh, markets looking a little bit jittery today. Unsure what's gone on there, but there has been, you thought we had a good trading session going. 23,400 appeared was there for the taking, and that slipped a little bit. Since Ekta's put us in this pharma mode, could you tell us what do you like from the pharma space? Wockhardt, I recall, came out with some very, very good news. The stock popped up 15%. From there, in fact, the stock has actually corrected more than 20%. What do you like from that space?
Nigel. Again, I think within the space itself, select CDMOs, CSMs, CMO players probably look a tad bit better placed, both in terms of their individual business models itself. And second, in terms of expectations of more niche launches expected to take place over the next few quarters, translating into better, robust, and more healthier margins compared to the generic or the more commoditized space. Having said that, Sai Life Sciences is something that we continue holding in our domestic and global portfolios as well. Our own sense is that the kind of products that Sai Life has, the expectations in terms of margin performance going forward, and the overall trajectory that the company is on, both in terms of revenue growth, margins, and expectations of bottom line growth, which we very, very closely track in terms of both the EPS rating as well as expectation of cash flows and the corresponding ROEs that it will probably generate. It probably seems to be in a good space as far as the entire sector is probably concerned.
Sai Life, huh? So what is the kind of returns you're expecting on this one? It's at around $1,200.
So I think our general take is that a 20 to 22% return that we probably go.
Got it. Okay, thanks for that idea, but we want some more. So let's do one thing. We'll slip into a short break, come back. We'll continue our chat with Mayuresh Joshi. Stay tuned. Well, this will go down actually as a disappointing trading session because the breadth of the market has turned in favor of the number of stocks declining. The Nifty was on the front foot. That as well has given away the advantage. And the Nifty Bank as well, that's been the strong index for the last few trading sessions. That as well has dipped. But I think you'll have to still bet on the Nifty Bank actually staying in their upcycle till the 20 and the 50 DMA are protected. But a few stocks are doing well today. So let's get the opinion coming in from Mayuresh Joshi. Mayuresh, Physics Wala, DAM Capital, they have put out a note today. They believe that better times ahead. The stock is actually at the high point of the day. And from the chemicals pack, actually, Navin Fluorine is a stock that's holding steady with a gain of around 2% in this sort of a market. Any view on either of these names?
Nigel, I think Navin Fluorine is something that we continue liking, and that stock probably finds a good space, again, in our domestic and global portfolios. Our sense is that the numbers were very strong as far as Q4 is concerned. But the management gave an equally strong commentary as far as the next fiscal is concerned. And one of the few companies within the entire broader universe that has given a very, very strong commentary in spite of whatever we're seeing in the West Asian prices getting unfolded. Having said that, I think both the HPP part of the segment, the R32 expansion that they're probably doing, the multipurpose plant where a large part of the capex is also getting put in, and the specialty plant, chemical plant as well. I think the expectation in the capex that they're expected to do and the commissioning expected to happen, the second half of FY27, the revenues can probably grow in a very fast fashion. And again, I think the margins at which these revenues might probably concur or occur might be at a very, very good rate as well. And therefore, I think that the earnings trajectory or the earnings rate will actually continue doing well for Navin Fluorine over the next few quarters, which makes us believe that the stock is poised to do well over the next 12 to 15 months.
Okay, all right. I got that. Navin Fluorine is poised to do well. Very quickly, two-wheelers. From the EV basket, do you like either of them? Because the Vahan data actually is showing a good growth and it's going to come on a low base because last year the first half of the year was weak. So some of these numbers actually will look quite impressive. Do you like either of them? Ather has been the outperformer, Ola has been the underperformer, and Greaves Cotton, they have that electric mobility part of it, though they're scheduled for an IPO. So we won't get much clarity on that front till the IPO comes out. Any of these you like or some other way of playing the EV theme?
So I think our own sense is that the OEMs might continue doing well, but the auto anchors, Nigel, can probably have a little bit of a better say, in our opinion. I heard the NRB management. In fact, if you probably look at the transcript of NRB Bearings itself, they've given a very, very strong outlook. They're developing a very strong EV portfolio. They are probably developing a large part of their pool outside the core automotive segment as well, in engineering and construction. And the pool of clients that they're servicing exclusively, I think whether it's the Mercedes or BMWs of the world, I think that really augurs well in terms of their supply chain. So NRB Bearings, I think with the kind of supply chains that they've probably got, the confidence that the management probably generated, both in their EV basket that they're probably expected to cater for the domestic and the global giants, and the expectations of foraying into newer segments, I think the stock is poised to do well.
Interesting one out there. Ms. Zaveri sounded extremely optimistic on the path ahead. Remember, this has been a company that's not grown that much, but it appears the promoter entity now seems to have sorted out the issues, and that's why they're focusing on growth, doubling revenues in the next 5 years. Well, Mayuresh, we'll thank you on that note. Thanks for joining in and talking all those stocks to us. Well, time to wind down the markets. A disappointing trading session. There was a lot of promise at the start of trade, but we end with a bit of a disappointment. The Nifty coming off close to around 200 points from the high point of the day. Disappointing session. The Nifty Bank as well. That's come off close to around 500 points from the high point of the day. What was the pocket to hide in? Actually, the FMCG index. Whether you look at Nestle, HUL, Colgate, those were the stocks actually that held up. Remember, they've been ranked underperformers, but they held up in today's trading session. Throw in a couple of banks as well. You have Axis Bank and Kotak Mahindra Bank, as well as ICICI Bank. All of them batted for the bulls. On the flip side, metal stocks have come in for some profit taking. Nalco has seen a good correction. Hindalco has seen a good correction. Coal India has seen a good correction. Actually, global facing themes were in a bit of a tizzy. Whether you're looking at the metal index or the tech index, both of them went home with some cuts in today's trading session. From the broader markets, Oil India was the casualty. That was down close to around 10%. Gold has seen a bit of a downtake, and that's not good news for gold financiers. So you had Manappuram Finance that was down close to 6%. Muthoot as well was lower in trade. And Kalyan Jewellers, after showing some promise, that stock has come in for some profit taking. An underperforming banking name today was IndusInd Bank. That was down 4.5%. What did well then, besides FMCG names? Well, we had Shree Cement that was up and about. Pidilite as well was a place to hide in, as well as Colgate did pretty well. Nucleus Software is another stock. Positive news flow coming in there. Only a 2,000 crore market capitalization company, but that was up and about in today's trading session, as was the case with Apar Industries, guiding for better times ahead. Well, we'll wrap up on this edition of Closing Bell. You don't go anywhere. On the other side, we've got a very, very interesting discussion lined up on Editor's Playbook. Stay tuned.